The ex-dividend date for within the next 10 days. So that basically just means that within the next 10 days, you have to buy the stock to actually get that monthly dividend. So I figured it would be a good time to talk about Realty Income, very popular retail name. And I'll talk through the fundamentals of this company. Then I'll go through the financials. And then at the end of the video, I will give you a price prediction for this stock. So with that being said, let's dive right in. So real dividend with a current dividend yield of 6%. And the dividend has 29 years of consecutive growth, so very reliable. And just to give an overview, so Realty Income Corporation is a dividend community favorite. Realty Income is a REIT that offers a growing monthly dividend, making it an appealing choice for income-focused investors. Currently, the stock boasts a high starting dividend yield hovering around 6%. Realty Income has always been an attractive investment for those investors seeking high dividends, and has an impressive history of dividend growth over the past. Realty Income has consistently increased their dividend payouts for over 29 years with a conservative payout ratio of 75%. There's still ample room for continued growth. The company owns and manages a diverse portfolio of commercial properties leased to single tenants on a long-term triple net basis. The company is organized as a REIT with its monthly dividends covered by cash flow generated from its portfolio of more than 12,000 real estate properties. The properties are predominantly held under long-term net lease agreements with commercial clients. I like the triple net lease structure because it provides investors with a range of advantages which make them an attractive option. So, with these leases, tenants assume the responsibility for property taxes, insurance, and maintenance costs, in addition to the base rent as well. So, why would tenants willingly sign up for this sort of structure? Well, a lower monthly rate, transparency in necessary maintenance, longer term leases, and a sense of stability that offers predictability for the tenants. I believe this is why we've seen the historical median occupancy rate for Realty Income remain at a high 98% through economic downturns against the S&P 500 REIT. The structure helps maintain a steady and predictable income stream for investors. Triple net leases are notably hands off, reducing management responsibilities for Realty Income as tenants are supposed to tend to the upkeep themselves. Realty Income has impressive enterprise value of approximately $62 billion dollars with an annualized base rent of about $3.8 billion. dollars. Its its quality is further underscored by its A minus rating from S&P Global Ratings. Their diverse portfolio of real estate and exposure to 85 different industries and over 1,300 individual clients, and excellent 91% of their rent is resilient to any sort of economic downturn. Therefore, 40% of their rent collected comes from investment grade clients. Their largest clients of their portfolio consist of popular businesses such as Dollar General, Walgreens, Dollar Tree, and 7-Eleven. The largest industry exposure is with convenience stores at about 11%, closely followed up by grocery stores, which account for roughly 10% of their portfolio. All of their top 20 clients fall into categories that are more resilient to being affected by e-commerce competition. The current dividend sits above 6%. It's as if we've taken a time machine back to 2014. The only time the dividend has ever touched 6% was a decade ago, and during the flash crash caused by COVID in 2020. If you were to buy during both of these periods, you would have collected some consistent dividend income this whole time. So if you missed out on the 2014 drop or the 2020 crash, you could call it, here is your redemption point right now. They've managed to increase the dividend payments for 29 consecutive years since 1994. The increases of the dividend come to an annualized growth rate of 4.4%. Starting a position captures an upfront yield of 6% and enables you to take part in this consistent dividend growth. The current payout ratio sits at a relatively low 75%, which means that management is able to use the remaining 25% to pay off its debts and reinvest into new acquisitions and expansions. As mentioned, AFFO growth comes in around 4% on average. Realty income has only had one negative earnings year, that was 2009. They managed to not only survive, but remain profitable during periods of economic downturns, as well as through the crash in 2020. Coming years, and when we take a deeper dive into their dividend here, we can see that they have a dividend yield of 6.22% to be exact. That's roughly a 75% payout ratio. They have a 5-year growth rate of that dividend of 3.7%, and the dividend has grown for 25 years. Like I said, this dividend pays out on a monthly basis, and then Seeking Alpha also rates this dividend as a B minus in terms of dividend safety. Dividend growth gets a B plus, dividend yield gets a B minus, and dividend consistency gets an A plus. It really should be an A plus plus given it's 25 years, which is absolutely insane. And let's talk about their valuation. So the PE is somewhat high for this company. So we have a PE of 36 for Realty Income, and that is compared to the broader sector's PE of 23 times. So this definitely is an expensive stock on a PE basis. On a price to book basis, it's quite cheap though. So we have a 1.1 price to book ratio, which is below the sector median of 1.2. And the average dividend yield is at about 5%, 5.5 to be exact. So we're above in terms of the average dividend yield. And then in terms of the growth rate, we can see that the AFFO growth rate of 5.7% is above the sector median of 2. And then we can see that the EBITDA growth for the past 5 years has been 23%. So, companies growing at a very fast pace there. And then in terms of revenue growth, just in the short term, over the past 12 months, we've seen revenue grow at 32%, which is actually significantly above the broader sector at 9%. And we see revenue growth for the next 12 months to be at 29%, which is still above the sector median at 7%. So when we kind of look at the valuation, yes, we're trading above the valuations of the broader sector, but at the end of the day, there's a reason for that, right? That's because revenue growth is so high, right? Growth is so high, so that's kind of why investors are paying up for the stock. Also, it's worth noting that the profitability metrics do look pretty solid for this company as well. So we have a gross profit margin of 92%, which is above the broader sector of 66%. So good to see there. And the AFFO payout ratio is 76%, which is above the sector median at 74%. So once again here, the profitability metrics are better than the broader sector. So if the profitability metrics are better than the broader sector, the growth metrics are better than the broader sector, that is why investors are paying up for this stock. And then with that being said, let's take a look at what Wall Street thinks about this company. So we can see here that Wall Street is actually very bullish on this stock. So we see 6 different bullish ratings on Realty Income, and there are 0 bearish ratings on Wall Street. So there isn't a single bear on Wall Street for this stock, which is definitely always a good sign. Also, it's worth noting that we have a consensus price target of $60, which is really just the average price target. So on average, Wall Street thinks this stock can move to $60. So this definitely signals that the general consensus on Wall Street is a bullish one for Realty Income Corporation. And then with that being said, let's take a look at the chart and give a price prediction for this stock. So we can see here that, yes, we're below all daily moving averages, and unfortunately, the stock has moved lower over the past couple months, but it's worth noting that we have major support at around $46, which is where we saw some consolidation in 2018. It's also after the COVID drop, we saw some consolidation in May of 2020. So therefore, I believe this $26 level could act as support for the stock. Unfortunately, given momentum is so bearish for the stock, it does look as if we will likely continue lower, just from a technical standpoint, not making a fundamental call at all on this stock. So from a technical standpoint, it looks like we'll come down to this $46 level. I do think this $46 level will act as support for the stock, and we'll see likely a move higher up to the 50-day moving average at around $52 for this stock. That's kind of just what the technicals are saying for Realty Income. So Long term, I think the stock is a really good stock within the REIT space. It's one of my favorites within the REIT space. It's one of my favorite dividend stocks, very consistent dividend. I think this stock is worthy of capital and definitely it has a place within a income focused portfolio. So, with that being said, I like Realty Income. I think it's a solid company growing at a fast pace, has improving profitability metrics, and it's really just a company that is worthy of capital if you're an income focused investor. So, with that being said, bullish on this stock. I'll end the video right now. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock and option markets. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio to help optimize your assets to meet your personal financial goals. Additionally, to better assist traders when searching for setups, I'm selling trading bots which will give you buy and sell signals and tell you how your trading strategy has performed historically on any stock or cryptocurrency that you're researching. Finally, if you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.